Ladies and gentlemen, good day and welcome to LTIMindtree conference call. Please stay connected. The call will begin shortly. Participants, you have been connected to LTIMindtree conference call. Please stay connected. The call will begin shortly. Thank you. Ladies and gentlemen, good day and welcome to LTIMindtree Limited Q3FY24 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Vinay Kalingara, Head Investor Relations, LTIMindtree. Thank you, and over to you, sir.
Thank you, Nirav. Good day, everyone, and welcome to the LTIMindtree Q3 FY24 earnings conference call. Today on the call, we have with us Mr. Debashis Chatterjee, Chief Executive Officer and Managing Director, Mr. Sudhir Chaturvedi, President Markets, Mr. Nachiket Deshpande, Chief Operating Officer, and Mr. Vinit Teredesai, Chief Financial Officer. We will begin with a brief overview of the company's Q3 performance, after which we will open the floor for Q&A. During the call, we could make forward-looking statements. These statements consider the environment we see as of today and carry risks and uncertainties that could cause our actual results to differ materially from those expressed in today's call. We do not undertake to update any forward-looking statements made on this call. I now turn the call over to DC for his opening remarks.
Thank you, Vinay. Good evening and good morning to everyone on the call. Thank you for joining us today. I wish you all a very happy new year. As we mark the one-year anniversary of LTIMindtree, I'm proud to share that LTIMindtree has been named a Global Future 50 company by Fortune magazine in its latest edition. What makes this achievement even more special is that LTIMindtree is the only IT services company to feature in the Future 50 list of global companies. I would like to acknowledge the dedication and hard work of all our associates that led to this recognition. In terms of our performance, we observed a higher level of seasonality during the quarter, along with an unchanged macro and demand environment. While we had expected the furloughs to be above average, they ended up being higher, both in terms of their degree and extent of impact. Despite these challenges, we delivered a resilient performance this quarter and achieved our highest ever order bookings. Our revenues came in at $1.08 billion, which marks a year-over-year growth of 3.5% in US dollar terms and 3.1% in constant currency. Our sequential revenue growth in US dollar terms was 0.8% and in constant currency was 0.7%. The sequential trajectory reflected the broad-based impact of furloughs across all verticals. Our manufacturing vertical saw a strong 20.1% year-over-year growth. Our EBIT margin for the quarter came in at 15.4%, while the net profit margin was 13%. We recorded a strong order inflow of $1.5 billion, registering a growth of 21% year-on-year despite the unchanged cautionary environment. With this, our 9-month FY24 order inflow stands at $4.2 billion, a 19% growth year-over-year. Our strong order inflow reflects the increasing relevance and strength of our edge-to-experience capabilities across all markets. During the quarter, we added 23 new clients and increased our count of $10 million plus clients by 8 year-over-year. Our $20 million plus clients have increased by 3, and our $50 million plus clients have increased by 1. Furthermore, our $1 million plus client band has now got 388 clients, an increase of 14 clients on a year-over-year basis. Let me now turn on to our industry verticals. Our banking, financial services and insurance vertical declined 1.4% year-over-year due to higher furloughs. This vertical continues to show a cautionary approach towards new spend. Our high-tech, media and entertainment business grew 0.3% year-over-year despite the impact of greater than anticipated furloughs. This vertical remains resilient for us. The manufacturing and resources business showed a strong growth of 20.1% year-over-year due to the seasonal higher pass-through. In the energy and utilities vertical, we have capitalized on opportunities arising from consolidation and secured a significant deal for transformation and supplier consolidation during this quarter. Our retail, CPG and travel, transportation, hospitality business grew 0.6% year-over-year. In the retail and CPG vertical, businesses are focused on optimizing their costs by consolidating suppliers and leveraging automation technologies. Within the travel, transport and hospitality vertical, we are seeing demand for our services related to data. Our health, life sciences and public services business grew by 6% year-over-year. LTIMindtree was recognized as a major contender in Everest Group's Healthcare Digital Payer Services Peak Assessment 2023. In terms of geographies, North America contributed 72.7%, Europe contributed 14.5%, and rest of the world contributed 12.8% of our revenue during the quarter. Our North America market saw year-over-year growth of 4.1%. The demand environment remains cautionary. What remains unchanged is the prioritization of spend focused on cost efficiency and transformation projects with a clear return on investment. We have observed clients using supplier consolidation as a lever to achieve their objectives and are reaping the benefits of this approach as some of this consolidation is being directed towards our company. I would like to call out a few important deals that we signed this quarter. A US-based premier oil and gas producer selected LTIMindtree as their strategic partner for end-to-end technology services. As part of the partnership, LTIMindtree will provide services across several value-based portfolios covering digital solutions, platforms, and operations. A global leader in the design, engineering, and delivery of customized facilities for high-tech industries has selected LTIMindtree as their preferred strategic partner for their digital transformation journey over the next 5 years. LTIMindtree will drive transformation across the technology landscape through multiple services, including cloud migration, end-user services, security, and application development and support. A diversified multinational mass media corporation has chosen LTIMindtree as their preferred ServiceNow transformation partner. This engagement will help unlock the value of their ServiceNow investments, improve ROI, and drive cost efficiency. A leading US-based energy producer has expanded its infrastructure managed services scope with LTIMindtree. A global financial services technology company has chosen LTIMindtree for its product development initiatives. A utilities company in the Middle East continues to strengthen its relationship with LTIMindtree by signing another 3-year agreement where LTIMindtree will support its transformation journey by identifying areas of expansion and optimizing the technology landscape. We are now participating across broader areas of customer spend. For example, we are working with McAfee, a worldwide leader in online protection, as a preferred and strategic partner for their transformation initiatives across products, IT, and commerce divisions. As part of this partnership, LTIMindtree will be providing engineering services and operation support at a global scale, helping McAfee drive cost efficiencies, agility in innovation, and product delivery. We recently announced the amalgamation of LTIMindtree subsidiaries, Syncordis and N+P, to form a specialized banking transformation practice. This practice will focus on delivering end-to-end consulting, digital, and IT services to banks and capital market firms. With digital transformation emerging as the cornerstone of competitive advantage and sustainable growth in today's business landscape, our partners and customers continue to actively explore and invest in AI-led opportunities. To fully capitalize on this opportunity, we have set up a new service line called Enterprise AI. This service line will enable us to create cohesive and comprehensive AI-first strategies by bringing generative AI interventions into all our service lines and across 4 customer priority areas: foundation, core, innovation, and experience. We have also trained over 10,000 employees on Gen AI to stay ahead in this ever-evolving landscape. I will now turn the call over to Vineet for Q3 financial highlights. Vineet.
Thank you, DC. Hello, everyone, and I wish you all a happy new year. I will now take you through the financial highlights for Q3 FY24, starting with the headline numbers. Our revenue stood at $1.08 billion, up 0.8% sequentially and up 3.5% on a year-on-year basis. The corresponding constant currency growth was 0.7% quarter-on-quarter and 3.1% year-on-year. Our EBIT margin came in at 15.4% compared to 16% in the previous quarter. The key moving parts for the margin decline are 200 basis points owing to higher furloughs, lower working days, and seasonal pass-through revenue. This was offset by 80 basis point improvement from SG&A and 60 basis point from operating efficiencies. Despite significant cash outflow due to dividend payments and mid-year incentives, our cash and investment balances crossed the 10,000 crore mark, and we had a strong treasury income of 151 crores. The effective tax rate for the quarter was 24.3% compared to 23.5% in Q2 of FY24. PAT margin for the quarter was stable at 13%. Basic EPS was 39.50 rupees for the quarter as compared to 39.30 rupees in Q2 of FY24. We continue to make significant improvements to the fundamentals of our invoicing and collections. For quarter 3, the total receivable days, including the unbilled DSO, was 85 days compared to 94 days last quarter. You may recollect that we significantly improved our unbilled DSO last quarter as well. In Q3, we further reduced our unbilled DSO by 3 days. The unbilled DSO in Q3 is 23 days versus 26 days in Q2. With our focus on collections, the billed DSO reduced to 62 days versus 68 days in Q2. Going forward, we aspire to continue this momentum and bring the total DSO closer to 75 days. We had a significant improvement in our cash conversion metrics in Q3. The operating cash flow to PAT was 155.7% this quarter on account of strong collections as against 92.1% in the previous quarter and 65.8% in the same quarter a year ago. Furthermore, free cash flow to PAT has shown a strong improvement to 143.7% compared to 75.1% last quarter and 35.6% in the same quarter a year ago. I am proud to note that our OCF and HCF conversion figures are the highest ever and have crossed 100% for the first time. We hope to continue this momentum. We closed the quarter with significantly higher cash and investment balances that stood at $1.216 billion or 10,115 crore rupees compared to 8,947 crores in Q2 of FY24. Return on equity for the quarter was steady at 26.6%. As of December 31st, 2023, our cash flow hedges stood at $3,687 million and hedges on the balance sheet were $295 million. Our utilization excluding trainees further improved to 81.4% compared to 86.6% in the previous quarter because of the pickup in the billability. Our attrition continues to be stable. For the quarter, our LTM attrition was 14.2%, down from 15.2% last quarter. We added more than 500 freshers this quarter. With the supply side easing up, we continue to plan hiring on a relatively real-time basis. Creating meaningful change forms the foundation of our CSR strategy, and we continue to positively impact our society through our CSR initiatives. For example, LTIMindtree has installed a solar power cold storage unit in Karnataka with a substantial capacity of 5 metric tons. We are committed to installing 12 solar power cold storage units, each with 10 metric ton capacity in various rural locations across India. Our Mahape campus in Mumbai has received LEED Platinum certification from USGBC, making it a part of select group of sustainable and innovative LEED certified buildings. We are pleased to announce that LTIMindtree won the prestigious Golden Peacock Award in 2023 for its exceptional sustainability efforts. The Institute of Chartered Accountants of India has conferred LTIMindtree a special recognition for gender equality and presented a silver shield towards business responsibility and sustainability reporting leadership for FY23. These awards affirm our stakeholder engagement and commitment to environmental and social impact. I now hand it back to DC for the business outlook.
Thank you, Vinit. Against the backdrop of a continued challenging macroeconomic environment, client decision making, we expect Q4 performance to remain similar to quarter. In this environment of restrained client spending, we continue to expand our value proposition to become a partner of choice for our clients. Despite experiencing higher than anticipated seasonality in Q3, our strong order inflow and healthy deal pipeline set the stage for our medium-term growth. While our margin optimization program continues, we remain committed to investing appropriately to capture growth opportunities, because of which our aspiration of a 17% to 18% exit margin will get pushed out by a few quarters. With that, let me open the floor for questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, wait for a moment while the question queue assembles. Participants, you may press star and one to ask a question. First question is from the line of Sulabh from Morgan Stanley. Please go ahead.
Yeah, hi. Thanks for taking my question. So my first question is on the near term. As you mentioned about 4Q growth rates being similar to 3Q. So just trying to understand that what is primarily leading to a continuing softness in 4Q, given that one would have imagined that these larger furloughs and deeper furloughs would have reversed in 4Q. and given you a reasonably strong 4Q. So just wanted to understand what are the moving parts there.
Yeah. So essentially, as far as the fourth quarter is concerned, at this point of time, our thinking is that some of the furloughs will come back, but not all the furloughs will come back. They will be coming back gradually. So essentially, the recovery will be gradual, and we will continue to have a bit of pass through in the next quarter as well. But it's pretty much the furloughs which, and overall, as I said, the environment is fairly cautionary, and we have to still wait and see how the macro plays out, because at this point of time there is a delay in decision making, which was there earlier also, and that continues to go on as we speak. And even as we work with our clients in terms of their budgets, a lot of clients have still not frozen their budgets. Still, their plans are also in a flux, which kind of makes our planning also very difficult. So those are some of the things that's kind of making us feel that Q4 will be very similar to Q3.
Understood. And my second question is with respect to the sales activity on the ground. So it's been a year since the time we started operating as a combined entity. So just wanted to get some context as to now, are we able to target larger size deals relative to the past, and how many such deals do we have in the pipeline, and how have been our win rates on such deals versus company average? So just wanted to understand how the merger has panned out versus from a revenue synergy perspective.
Yeah, I will request Sudhir to answer, but before that, the short answer is that you will appreciate the fact that when the merger was announced, we were very keen to integrate our capabilities in a very short time frame. So we actually got the merger completed in a very, very short time frame to capture the market opportunities. Unfortunately, we never expected the macros to play so heavily in terms of not being conducive to the situation that we're expecting. But in terms of overall cross-selling and upselling opportunities that we got, or getting a seat on the table because of our size and scale, I think all those things have worked out fairly well. So let me request Sudhir to add more color.
Sure. Thanks, DC. Yeah, as DC mentioned, what we've seen is a very significant uptake in our large deal, overall pipeline. So our overall pipeline currently is around $4.6 billion, and it's about 3% up from the same time last year. So that merger thesis has certainly played out well. And the other metric that I'll share with you is that the number of advised deals is very, very significant. We are participating in almost 30 plus advised deals right now, which means that deal advisors are seeing that clearly as I think what we're seeing in the market is as the best possible alternative to some of the larger players in the sector. So that part is certainly playing out, and it's also playing out in our order book, as you've seen. This quarter also we've recorded $1.5 billion order book, which is on the back of the deal win, some of which were also mentioned in DC's opening remarks.
Thank you.
Okay, and then,
Sorry, sir, go ahead.
Service line, I'll just say that, we're seeing strong growth in our ERP service line. It's been a traditional strength of LTIMindtree, and we're continuing to see strong momentum there as people look for core modernization related work, and that's the other part of the large deal portfolio also that we're seeing.
Thank you very much. Sulabh, I'll request to come back in the question queue for a follow-up question.
Thank you.
Thank you. Next question is from the line of Ravi Menon from Macquarie. Please go ahead.
Hi, thank you for the opportunity. DC, you mentioned that next quarter too, we might have a little bit of the pass-through. So would much of this go away then, and should we think about this as a headwind for revenue in Q4?
No, I think what I said is, we had higher than usual pass-through, but if you look at our overall If you look at the last financial year, there was a pass-through which is, seasonal with respect to Q4. I think it will be similar in line with whatever we saw in Q4 of last financial year.
And this quarter, it looks like there is a significant element of pass-through because, looking at your segment margin for manufacturing and resources, that seems to be practically flat QOQ. The segment profit while revenue is up. So should we think about this going away next quarter?
Avi, this is Dinesh. So the pass-through revenue, seasonally, it was always there in the second half. This year we had a slightly higher number in Q3. Q4 you will see a little bit again on a similar ground, a little bit of a higher pass-through than what you have seen traditionally. But yes, we are not right now looking and talking about the Q1 of FY25. At the time we'll have some other levers to offset this headwind that will be coming.
Thank you. Bless you.
Thank you. Next question is from the line of Nitin Padmanabhan from Investec. Please go ahead.
Yeah, hi. Good evening. So with reference to the headwinds that we're facing, if you would give us some context on which verticals are really seeing this extended pain, because some of our peers have actually called out maybe bottoming out on BFSI and so on and so forth. So just wanted your thoughts on, those verticals and how things have evolved and what's really causing the pain going to next quarter.
So first of all, rather than calling out vertical, it's always a reflection of the clients that we manage in our portfolio. And of course, as we called out, we did see a decline in BFSI, and I would say though the insurance part of the portfolio has been resilient, but we did have some challenges in BFS, and it's again the higher the furloughs, and we expect that some of the furloughs will be gradually coming back as we get into the